Wealth is a concept best grasped with the intellect rather than the senses. In the autumn of 1976, an opportunity arose to acquire a modest apartment on the outskirts of a bustling coastal city. The cost was $62,000 for a charming two-bedroom, one-bath space in a typical complex. It seemed ideal for tenants, promising a swift lease. Eager to share this find, a visit was paid to a seasoned mentor's office, brimming with enthusiasm to present the paperwork. The mentor, with a quick scan of the details, paused and inquired, "What's the monthly shortfall on this?" "Roughly $120, came the reply. "Don't be reckless," the mentor cautioned. "I haven't crunched all the figures yet, but it's clear this is bleeding more than you think. Why would anyone deliberately tie their funds to a sinking ship? It's a nice place," was the defense. "A fresh coat of paint, and it'll shine. Plus, it felt like a steal. Polishing a turd doesn't make it gold," the mentor quipped. "Surface appeal doesn't offset a deliberate loss." "The agent assured me the monthly hit isn't a big deal," the explanation continued. "In a few years, the value could soar, and there's a tax perk for the shortfall. It was too good to pass up. I worried someone else would snag it." The mentor rose, shut the door, signaling a serious lesson was imminent, a familiar ritual of tough love and enlightenment. "So, what's the real monthly drain?" he pressed again. "About $120, was repeated, with a hint of unease. Shaking his head, the mentor dove into the education. That day unveiled more about finance and investment than decades prior had taught. The mentor praised the initiative to leap into property but highlighted critical missteps that could have spelled ruin. Yet, those early blunders laid the groundwork for millions earned in the years that followed. Wealth is perceived with the mind. It's not about what catches your eye, the mentor explained. A building is just a building, a stock just a piece of paper. You can touch them, see them. But the unseen drives their worth. The terms, the market pulse, the cash flow, the risks, the tax landscape, and countless other threads weaving the tapestry of a smart investment. He dissected the proposal with piercing questions. Why accept such steep interest? What's your projected yield? How does this align with your broader financial map? Have you factored in empty units? What's the return rate? Did you dig into the building's past fees? What about upkeep costs? Are you aware the city's rerouting traffic nearby, turning your quiet spot into a thoroughfare? Tenants might flee the chaos. The market's trending up now, sure, but is it solid growth or just hype? How long will that last? What's your backup if it sits vacant? How long can you float it? What logic convinces you bleeding cash is a win? That's the real red flag. It seemed like a solid bet, came the humbled response. The mentor grinned, offering a handshake. I'm proud you jumped in. Most dream but never act. Mistakes are your best teachers. Life's truest lessons come from doing, stumbling, and fixing. That's how insight takes root. The air lightened, and the learning deepened. People fixate on a property's facade, or a stock's name, the mentor continued, swayed by a broker's pitch or a coworker's tip. They buy with their hearts, not their heads. That's why so few investors profit. They break even at best, riding an emotional roller coaster instead of reasoning through. They chase quick riches, turning into speculators, hustlers, or worse. The world's full of them. Let's unpack this leaky deal you grabbed and flip it into a winner. I'll show you how to train your mind to spot what your eyes miss. Turning tides. The next day, negotiations reopened with the agent. It was gritty work, but the lessons sank in. 3 days later, the mentor reviewed the revised terms. The price held at $62,000, and the agent earned his cut. Fairly deserved. But the deal's guts had shifted. Lower interest, adjusted payments, and a stretched timeline turned a loss into a steady $90 monthly gain. Even accounting for management and vacancies, the rent could drop in a pinch and still profit, or rise if the market boomed. I pegged your loss at $180 a month, maybe more, the mentor noted. With your current cash flow, how many of those could you juggle? Barely one, was the honest answer. Most months I'm stretched thin. That original deal would have buried me. I'd have needed extra work just to breathe. And now with $90 coming in each month? He probed. A grin spread. I'd scoop up as many as I could find, the mentor nodded approvingly. Good. Go hunt for more. Years later, that coastal market exploded. Instead of one property riding the wave, 7 doubled in value, a testament to sharpened financial instincts. You can't do that. When the reworked offer hit the agent's desk, his knee-jerk response was, "That's impossible." The real challenge was prodding him to rethink his limits. That deal taught volumes, chief among them. When someone declares you can't, it often reflects their own boundaries, not yours. History echoes this, like when naysayers scoffed at the Wright brothers, only to eat their words when wings took flight. Trillions in motion daily, trillions zip across the globe in digital streams. More wealth exists now than ever. Yet it's invisible, pulsing through circuits. Most toil from paycheck to paycheck, blind to the $1.4 trillion dancing daily, seeking stewards who'll nurture it, master its care, and it flocks to you. People thrust it your way, neglect it, and it slips through your fingers. True financial acumen isn't just earning, it's keeping, growing, and passing it down. The Sightless Guide. Most folks invest with their eyes wide and minds half shut, the mentor observed. To thrive as a business owner or investor, flip that. See 5% with your eyes, 95% with your mind. He stressed vetting advice sources keenly. Struggles often stem from heeding the financially blind. Peers, or kin who mean well but lack vision. It's a parade of the sightless. Want wealth to find you? Tend it well. If it's not a priority in your thoughts, it won't linger in your grasp. Sharpening your financial lens. How do you start seeing wealth? Begin with literacy, the language and math of money. Each economic sphere speaks its own dialect. A doctor might say, "Your pressure's 130/85. Is that fine?" It's a start, but not the full story. Likewise, an investor notes, "My stock's PE is 15, my rental's yield is 10. A foothold, not the summit." Mastery begins with fluency in terms and figures. Risk isn't the gamble itself, it's ignorance. Investing mirrors piloting. With training, it's exhilarating. Without, it's perilous. Leave it to the pros if you're untrained. Advice beats silence, but only if you sift good from bad. Too many inherit shaky financial folklore from home, not spoken, but lived, and echo it blindly. Advisors reflect your acumen. Your counselors match your wits, the mentor advised. If you're green, they pitch safe bets. If you're sharp, they unveil intricate plays. Educate yourself first. Few will spoon-feed you wisdom. Their time's costly, and your savvy sets the ceiling. Bankers and truth bankers were allies to the mentor, yet he guarded his flank. When they call your home an asset, are they straight with you? Most nod, trusting the label, but literacy reveals the catch. It's their asset. An asset feeds your pocket. A liability drains it. Your mortgage is your burden, their boon. Your balance sheet bleeds, theirs blooms. Pay it off? Taxes and upkeep still nibble, and the state can claim it if you falter. Real estate's name nods to royalty. It's never fully yours. Interest's hidden sting at 8% on an $80,000 loan for a $100,000 home. 5 years nets the bank $35,000, mostly interest. Over 30, it's $130,000 above the loan. That's no mere 8%, it's a quiet 160% haul. They bank on you upgrading or refinancing every 7 years, pocketing more each cycle. Tax breaks nudge you deeper into debt, not for your gain, but theirs and the state's. Savings double-edged savings are yours, yes, but to banks, they're a cost. They pay you pennies, then leverage each dollar tenfold, charging heftier rates on loans. No tax perk for saving. They'd rather you borrow, funneling cash their way via interest. The game's core. The game's called Who Owes Who, the mentor revealed. You nearly got saddled with the tab. Wealth hinges on indebting. Others to you, not the reverse. Money's a debt note, fiat backed by faith, not gold. If trust wanes, it crumbles. Play smart. Know the rules, the players, and the stakes, or be played. Facts over feelings. Success demands facts, not guesses, he insisted. Numbers don't lie, opinions do. A home's value is a hunch. Profit or loss is fact. Gold's worth hinges on your trade, not its glitter. Lives derail when hearsay trumps data. Houses always rise. Stocks beat all. Verify, or it's just noise. Due diligence. Check your homework, he urged. Lazy folks chase shortcuts. Timid ones freeze in analysis. Balance is key. Sift truth from chatter, then act. Most flounder because they skip this, leaning on flimsy tips instead of solid ground. The mind's wealth, money's an idea, clearest to a trained mind. Learning its game is step one. Becoming its master is the journey. Wealth through wisdom isn't just about having, it's about seeing, doing, and being.